In this video, I will be speaking about GBP USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which just tested a very strong area of monthly demand and support, which was still acting as support here and again here, which at the moment, since the market has once again tested it coming from above, it respected it as support and is currently rejecting it to the upside. So more bullish price action could be expected by looking at the monthly time frame away from this zone. Now, if we drop down on the weekly, we can see a quite different scenario. In fact, we can notice how actually from a weekly perspective, the market is currently trapped in a range. We have the top of the range here and the bottom of the range here. Now, we can see how already multiple times the market has respected the top of this range, and at the same time the bottom of the range is holding as well. So at least from a weekly perspective, it would seem like we have good probabilities of remaining in between these boundaries. Now, if we go down on a daily time frame, what do we see? From a daily perspective, first of all, I did speak about GBP USD a few days ago. After this impulse, I explained all the reasons for which we could expect first the correction and then more bullish continuation for the market to go and test the high of the range, which is exactly what the market has now created. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, at the moment, what we can notice is that we have a market which has now started creating an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here on the daily, what we could expect is a potential rejection to the downside and then for the market to create a rejection higher for the completion of the M pattern at the neckline. Now, so going back to GBP USD, if the market here would create this rejection to the downside, things would be very interesting because at that point we would have the creation of an M pattern, and as we said previously, after the creation of an M pattern, we could expect a potential rejection higher for the completion of the M pattern at the neckline. So if we will have the creation of this pattern, how we could be approaching a potential rejection to the upside for the completion of the M pattern at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.